Good morning. Welcome to IG's early morning call. It's Tuesday, 22nd of August. Let's take a look at the headlines as we continue to see yields around the world rise. We've got gains across the bond markets in terms of overall yields, which means that there should, in theory, be pressure on the equity markets, although now we're looking for a slightly stronger start to the European trading day ahead. And we're seeing some recent gains as well now on the Hang Seng, which has been a performer a little bit earlier on today on concerns about the outlook in China. Well, there's no worries about China so far as BHP is concerned. We've seen earnings drop, but the company says that it remains confident about the returns it's seeing from the Chinese economy in terms of demand. And late last night, all sessions on the IG platform, if you were long Zoom, you're in the money. Earnings and revenue topping forecast and the outlook pretty good for the company, which says it's benefited from people working from home. It's now ordered its staff back into the office. Take a look at volatility. We're down for a third day in a row. And in fact, this is picking up now, interestingly, on the downside. And I wanted to take a look at what's happened in the most recent past. This is the FTSE 100. The big losses that we've seen over the last few days resulted back at the back end of last week with a drop below the 100% retracement. Initially down very briefly, down intraday to levels not seen since the 20th of March, before coming a rebound. The rebound in today's trade is an interesting one. This little bit of a green candle. It's not a big move in terms of the big picture, but if you look at what's been happening, let's say in 5-minute candles, you can see in the last half hour or so, it's picked up nicely on the upside. We're now trading at 72.80, levels that we have seen recently. But to be honest with you, I'm looking at what's happening on the one-day candle chart, and I continue to see a market under pressure. This is just a small rebound in what is otherwise a market that remains firmly on the downside. Let's take a look at what's happening on the German markets, because we've got a slightly better position that's developing on the German DAX. Not quite a total rebound, offset of the Fibonacci that we've seen, down just to levels not seen since the 7th of July, the back end of last week. Then came the recovery, and in today's session we got an even stronger start expected on the German DAX, and the same sort of thing on the French markets. Big gains in the markets yesterday, mostly on expectations for upside oil, but as we'll see in just a few moments' time, oil's not really been performing today. And we've got another green candle on the French markets, trading at 72.35, which is where we're standing at the moment, looking ahead to a stronger start pretty much across the European markets on the session in today's trade. Overnight in Asia, some interesting news from SoftBank. It's having a second go at its IPO of its ARM unit, the software company which was bought off the London markets a few years ago. The first attempt last year to float the business was met with objections from the US and the European antitrust regulators. The chip designer disclosing the paperwork for an initial public offering that's expected to be the largest this year. And that, I think, is one of the really big interesting features of the markets in the session in today's trade, that techs are being well bid. ARM didn't reveal the number of shares it's planning to sell, nor the valuation it will seek. But according to an earlier report from Reuters, SoftBank is planning to sell about 10% of ARM's shares, seeking a valuation of between 60 and 70 billion. Now, will be good news for the IPO market, as we'll see in just a few moments' time what's happening on the Nasdaq. But you can see at the moment we got gains across the board on the Asia Pacific markets. I want to show you what's been happening with the Hong Kong Hang Seng Stock Index in particular. It doesn't look a big move in terms of the move on the daily candles, although it is, technically speaking, it is a bullish engulfing candle, which technically means it's good news, but we'll have to see how things develop in the next few days. I want to show you the candle timeline in 5-minute increments from around about 5 to 7 UK time this morning. Just see money going into these markets, and it's the same across Europe, it's the same across much of Asia. We've seen a little bit of an uptick in the last half hour or so. Unable to tell you exactly what the reasons are. There's no headlines been developing. Normally when you get this sort of strong move, there's a reason behind it, but just seems like people are positioning themselves maybe for the opening of the European markets. Let's look at what's been happening on Wall Street as of the close yesterday. The Nasdaq was the big gainer. Just reverting back to that IPO story around ARM, Amazon and Nvidia have both been mentioned as potential anchor investors in the business. We'll have to see how things develop there and when the IPO comes out. But it was gains across the board for the tech sector generally yesterday, up 1.56% for the Nasdaq. S&P 500 enjoying a lift on the session in yesterday's trade. It was techs that did much of the heavy lifting there. But the underperformer was the Dow Industrials. Let's look at where we are for the Dow, bumping along the recent bottom. Not quite as low as the rising line of support that we've seen over the last few days, but nonetheless looking as though that market now wants to test that. But it was the tech stocks that really did the motor, had the motor yesterday, and gaining to a level which took us up to this line of prior support at 14,920, and indeed in today's trade we're now above that. With a little bit of a green candle developing, looking potentially as though we could well see a little bit more of an uplift on the session when we see things get underway on the cash trading day later on. I'll cover Zoom in just a couple of minutes' time, because that was one of the highlight stories late in the session yesterday, the 24-hour markets, giving a little bit of a lift for the Nasdaq. Let's take a look at what's happening here in the UK. We've got some public sector net borrowing numbers out, which are interesting. The headline figure itself is way below forecasts. We were looking at something like around about 17 billion, which is what we saw last month in terms of borrowing. It's actually come through at 3.48 billion. So that is a lot better than had been expected. I'll show you what's going on with sterling at the moment. Sterling is gaining on the trading day today. I want to show you the candle chart the last 5 minutes. You've got that uplift there that we've got for sterling. UK July public sector net debt, excluding banks, came in at 2.579 trillion sterling, equivalent to 98.5% of GDP. Big influence on the GDP number. But whichever way you cut it, sterling's on the way up at the moment, 127.91, and it's enjoying a little bit of a trend on the way. We're being capped out by the 50-period moving average, just above where we are from 127.90. The next line of resistance to watch out for were the highs we had back on the 16th June at 128.48, and then the next line is 130 sterling against the US dollar. Talking about dollars, in terms of some of the data out later on today, it's second division data, I think it's fair to call it, 3 p.m. this afternoon. US existing home sales expected to fall by 0.5% in July month on month. We've been hearing a lot of the property news coming through here in the UK yesterday with Crest Nicholson steering the entire sector lower. We've got problems with the property sector in China, and it looking as though we could well see a compounding of this by a small drop on existing home sales in the States later on today. For that, if for no other reason, just looking at what's happening with the dollar chart. More money going into the euro over the last couple of days, 109.16. But I think when looking at the dollar, one has to continue the focus on what's going on, likely to go on at Jackson Hole a bit later on this week. The dollar, second day in a row of losses against the dollar basket, just being held up by the 200-day moving average at 102.80, which is where we're standing there at the moment. Corporate news, well, it's been led by the miners. As we saw in the headlines this morning, BHP coming through with some interesting headlines. It posted its weakest annual profit overnight since 2020, as it finds itself squeezed between surging costs and a tight labour market and the weakening of Western demand for commodities. Let's take a look at the numbers before we take a look at what's happening with the shares. BHP's underlying attributable profit falling by 37% to 13.42 billion US dollars, missing estimates of 13.9 billion. The miner declared a final dividend of 80 cents a share, down from $1.75 this time last year. That won't please investors. Yet BHP remains confident as it sees China and India as relative sources of stability for commodity demand. I think that puts it in some sort of contrast compared to what we're seeing here from the West. It expects China, its main trading partner, to produce more than 1 billion metric tons of steel this year for the 5th year running. And when it comes to the weakening of the Chinese economy, BHP thinks it's too early to assess the impact of Beijing's policy measures on the country's housing market. I want to show you this chart first before I show you what's happening in London or what's likely to happen. That stock is down 1% on the Australian markets. But I think if you look at that's today in the wake of the news out earlier on. But if you look at what's happening here in the London markets over the last few days, it's dipped below the low line we had in place on the 31st of May. And as of the low point 2 days ago, on Friday last week, it hit levels not seen since 2022, said BHP, having lost all of the early advantage in the early part of the year on hopes that the opening up of the Chinese economy will stir a really big cyclical upswing in demand for raw materials. Hasn't materialized, forget the pun, and we've now got this stock trading down. And if we see a 1% loss from where we are at 2,200, I'll let you do the maths on that and work out where that's going to end up, or rather open at the start of today's session. Let's stay on the charts because I want to move on with what's happening with John Wood Group. This is the oil field services company. Shares in the oil and gas engineer plummeted back in May, you can see here, after the company announced that the £1.7 billion takeover bid by Apollo, which valued the company at 240 pence a share, is now well and truly over. And as a result of that, we've seen that stock pull back. But today, it's posted a net loss of $27 million in the first half. Operating income, $23 million. Increases its full year revenue and EBITDA guidance, though. Revenue is now expected to be around $6 billion. And this, I think, overall, despite the fact we've seen a net loss, if you look at the number of other aspects of the business, the margins are up, the EBITDA profit is up, and revenue is better than expected. So let's look at this potentially in terms of upside. if you're long at 147.9, your stop would go down here to around about the 140 pence level, which is below the 50 period moving average. If you think there's enough information here to go short on this, your stop would go above the 200-day moving average around about the 163 pence level. So it depends on how you view the earnings, where we are on the trading at the moment. But if you look at where we are, excuse me, in terms of share price, you're in between this band here, between the lows that we had. Let me just pick out that. Lows we had back at 123 pence, going back to the beginning of June, to the highs at 167 that we've seen in the last couple of weeks or so. So you pay your money, you take your choice, look at the numbers, decide where you think it's going to go, and that would be the best way to set that up. The communications company Zoom shares soared in post-market trade last night on the IG platform all sessions. Excluding items, the company came through with some interesting numbers for the second quarter profit of 1.34 pence or dollars per share compared with the target estimate of 1.06. Now, revenues for the quarter ended July 31st rose 3.6% to 1.14 billion, and that was above analyst average expectations as well, at 1.12 billion. Zoom also raised its annual earnings and revenue forecasts. It now sees $4.63 to $4.67 in adjusted earnings per share, up from $4.30, and 4.48 billion to 4.49 billion in revenue, up from 4.49 billion for the full year fiscal 2024. So all things looking good. As a result of that, we saw shares rise substantially in extended trade. In fact, rose above this falling line of resistance I've drawn on here. I think when it hit that back in the back end of July, it was a really stunning trade yesterday. In fact, we ended down off the highs, but nonetheless up 5.96% at the end of the session. Now, notwithstanding the after-hours move, Zoom stock has declined around about 1% so far this year. Well, the S&P 500 index has risen 15% over the same period, so it has been a massive underperformance by Zoom. But you can see since the really big gains that we saw during the COVID lockdown, Zoom has lost a substantial amount of its overall value. Today, we expect reports from Lowe's, Toll Brothers, and also Macy's. So there's a small retail sort of feel to the share trading today. All these come out before the start of the bell in today's session, so it might have an influence on the direction of travel. But certainly Zoom potentially could well see a stronger start on the Nasdaq when things get underway a little bit later on. Let's get back to the charts and take a look at a couple of other areas of the market. Second, let's call it a third day in a row of gains for the price of gold at 1898, trading below the 200-day moving average. I think it's really all about what's happening with the dollar in the next few days or so. US crude rebounding from the lows that we saw on Thursday last week, holding on to middle ground at just over the $80 level for the price of a barrel of crude. That's it from me. We will be back at 10:30 with charting the markets. Do look out for the start of today's trade for John Wood Group and also BHP beginning today's session top of the hour. Across the London and European markets, we continue to open with some small gains to start the session today.